So, hello everyone. I'm Hrishikesh Sathawane. I'm a mentor to advisor to a few startups recently. My background, I'm an engineer, and then after doing a lot of stuff in engineering, creating growth, and really bringing productivity. One day I realized I don't really understand much about the business problems I'm solving. So I got myself an MBA, and then I was on the customer side. So I was a bridge between customers and the engineers or the product people, uh, understanding customer problems, converting it into business issues that can be solved using my company's solutions. And during the process, I always focused on creating growth. Multiple ways to do that. One is to just find new industries for your current product. Second is to work with startup and innovation ecosystem to find synergy between the innovation that is happening outside the company and use that to grow your products and whatever else you want to do with your own company. Third is to streamline the internal activities so it aligns better with the market. When I met Gaurav, I came to know about a fourth way of creating a growth, and that is using the OKR framework. Now, I had read about the OKR framework, tried to even use it in our internal group, but it didn't work. And when I met Gaurav and he talked about how a sophisticated software can really make sure that the OKRs can be implemented properly, I thought to myself, oh my gosh, this is the lowest hanging fruit for creating growth instead of like looking for new industry or doing open innovation or anything else. And it works with your existing employees. You don't even have to kind of let go of anyone or hire any new people. So that's my journey for the OKR. And when I started thinking more about growth and interacting with more startups and more venture capitalists, I realized that VCs care a lot about their startup growths because that's how they will multiply their own money. VCs put some money there and they need to see that money multiply to 10x. And that money is not going to multiply itself unless the company itself grows. And the faster it grows, the sooner you can get to the 10x multiple. So at a high level, it really makes sense. But to double click on that aspect, we have invited Pramod and Ketan, who are part of the VC world, and they will give their perspectives on the use of OKR startups and how it benefits the startups. And it not only benefits startups, it also benefits the VCs on the growth that it creates. So I would like to get deeper into those aspects. So welcome Pramod, welcome Ketan, and we also have Gaurav, who is CEO of Job, the OKR and performance automation company. So I'll let you guys introduce yourself in your own words, starting with Pramod.
Yeah, sure. So I'm Pramod Gosavi. I'm an investor at 11 to Capital. So we are an early stage fund I focus on enterprise software that includes SaaS as well as infrastructure. I'm really passionate about bringing tools and productivity tools to the enterprise. Previously I worked at large companies like VMware, and I saw this large company, they really struggle with productivity. And OKRs is like one way that Intel popularized. But more importantly, last few years, as I'm investing in early stage companies, I feel like OKRs are a lot more useful even for startups because they don't have processes. So pretty passionate about the topic, and thanks to Rishi and Gaurav for inviting me.
Good morning from this side. I'm connecting from India. So thank you, Rishi, for having me here. Thank you, Gaurav. Thank you, Pramod. And thank you, everybody who's joined in. I work with a brand called YourNet, which is a very early stage deep tech B2B focused venture capital firm. Been with them for about 2.5 years as a venture partner. On the other side, I've been working on, with the company startups, right? So I've been in with various companies, which was 0 to 1, 1 to 10 as an HR professional. I enjoy technology and I love understanding people and see how, the melting point for me is when people and technology come together, magic happens. So that's what this, got me excited about this conversation. So looking forward to, sharing my experiences and perspective and hearing everybody out here.
Yeah. Gaurav?
Hey, good morning, guys. I'm also in New Delhi right now. So morning at our part of the world and evening for all the friends who are tuning in from San Fran or the other across the globe. So my journey has been an entrepreneur for about 2 decades now. Really built some technology businesses before and now at the journey of building job. At Job or Joy of Performing, we're in the space of business and people performance enablement. And the way to that journey is through OKRs, is what we have taken up. OKRs or objective key results allow that framework for people to be aligned, have transparent goals, and be very outcome driven than just output driven. And I think it served us well in different businesses that I have applied it to. And now we've got about 35 customers who are using the product and giving us some great feedback. So yeah, looking forward for this conversation, Rishi. Thanks for, putting this together.
Well, thank you everyone for their introductions. So before we go deeper into the OKR and the investor perspective, for people who are not familiar with OKRs, Gaurav, can you double click on what OKRs are? What's the philosophy? Maybe a little bit about where they originated and how at a very fundamental level it improves the performance and results into growth.
Sure. So before I talk about OKR, let us talk about the problem of why they originated, right? And what we've seen is that a lot of businesses today are struggling because there is seldom an alignment from business to people perspective. People have their own goals that they are chasing, and somewhere during that chase, the business goals kind of take the isolation, right? And that is where the struggle then happens, because the management and the leadership have to figure out a way to kind of put that in alignment and see that people are moving in one direction and momentum is built, right? And that can happen in smaller startups and going into medium businesses and even larger businesses, because at one point, large or enterprise businesses are teams which are smaller in nature. So the same kind of impact happens in all size of businesses, if I may say so. So there have been various frameworks before OKRs as well. Like one of the most famous has been Balanced Scorecard, which has been there for a few decades now. But then move away from Balanced Scorecard to OKR just because the agility it has. It works in a very spotlight approach so that you can break your year into different quarters and really zone down into a quarter and figure out that what are those initiatives or actions that a team or individuals in a team have to take in order to move the needle, right? And then regular check-ins and cadence for you to see where is the gap or where is the challenge for one team to come together and solve for. So I think that's the beauty of the agility and and the really focus that it brings on. OKRs have been around for a few years now, actually. John Doerr made it very popular, and it's been around since the 90s from the Intel days. One of the more famous companies who've got OKRs into limelight have been Google. They started using OKRs when they were about 40 people. I think there are more than 150,000 people now, and they're still using this platform. Today, a lot of big, I wouldn't even call them startups today, but companies like LinkedIn, Dell, all of these are on OKRs. And what we have seen is there has been a major shift that not just tech startups, but organization in the manufacturing field, industry, real estate, retail. We've got like various other industries that are coming in and waking up to this philosophy just because of the framework it has and the benefits it can create for an organization and for its people.
So to kind of summarize it a little bit more, John Doerr wrote a book on it. It's been there since Intel, early Intel days, and Google and LinkedIn and some of the very high-profile tech companies are using it. Plus, it's not just for the tech industry, but for anybody, small, big companies, any industry. So that's great. And the reason it creates growth is because, it aligns your high-level goals from the executives with the very basic low-level goals at each employee and the whole hierarchy. And when everybody is sailing in the same direction and not pulling each other in different directions, you go faster in that particular direction. That's simple. So thank you, Gaurav, for that overview. We will now move on to Pramod and Ketan. Let's start by, telling us about, are any of your portfolio companies using OKRs, and what have you seen as a result of using OKRs?
Yeah, I can go first. A few of my companies, they use OKRs. So the OKRs are at an early stage. It's mainly milestones, and they go from like quarter to quarter. So the OKRs could be different for different functions. So for example, engineering, it's like if we are marching towards some kind of a features, how many releases we did. So that becomes like an OKR for the engineering function. For the sales function, is the pipeline, like how much have you bringing in. So it varies according to different roles, but it's sort of anchored towards what are the quarterly goals for the company, and then everybody's marching towards that. And then based on how they're done, the next quarter's OKRs will be updated based on how the team is doing and what are the priorities of the company.
So when I tried to use the OKR, we were just doing it on Excel. Is that how these companies are doing, or they're using some more sophisticated means?
It's mainly Excel. Sometimes it's in some sort of a project management. Sometimes it's sort of just Slack. So it's done very informally, but I think everybody sort of told that, hey, this is what you need to be doing this quarter, this month.
Okay. And then are they seeing the results of using the OKRs?
Yeah, I think the more importantly, the companies who don't do that, we see like the difference in the performance. Like a lot of times the CEOs, where there's a quarterly board meeting, they'll start working on the board meetings like, a week before, and they, it's sort of very backward looking. They realize that, a lot of the things are not met. So OKR is the way to sort of do it very proactively. And for a startup, you need to sort of fire on all cylinders. So you cannot just ignore something. And it's important, like depending on whether the founder is a technical person or not non-technical person, they need to really focus on everything else also in the company. Like a lot of times the founder focuses on the product, and then marketing and sales are not really getting tracked. So OKR tends to be a good excuse and a good framework to make sure that the company is executing on all of the deliverables.
Yes. So it's not just about aligning the goals, but it's also about kind of boiling up the problems early on. So when the board meeting comes, you're a lot more prepared with what is the status of your company today, instead of trying to go back and ask everyone and pull that information.
Yeah.
That's awesome. So Ketan, what is your experience been?
I'll pick it up from one point that Pramod said. Leaving the construct of the OKR, the companies or portfolios of the founders who are able to move faster to, what the vision they had set for themselves, versus companies which are still, trying to reach there. Fundamentally, if you look at, they have been practicing OKRs as a construct without even knowing it. Right? That's one thing that I've realized, which means, they have a vision. And as Gaurav said, it's about how do you put strategy into action. So they have a vision, right, on which, they want to make a difference to the world. And that's where an investor comes in. And now they have to deliver to that or do better than that, right? That's where, it's like a hypothesis that you have to prove to be true. Now, there would be multiple things there would be multiple priorities, there would be, multiple expectations. But the companies which are fundamentally able to beat their goals every single time, if there's one thing they've done very well is choose what to focus on, right? They typically would have 3 or 4 big rocks or objectives that they'll pick up. And then they would convert that into an action label, which translates to a lot, across the team, because they're very, very early. And I'm talking about very early stage. So fundamentally, if you see, and that's one of the reasons why the construct of OKR is very exciting, right? A lot of people are using it, but they don't even know, they're actually taking the fundamental construct. The missing piece or the link for them is, if there is a platform that can enable them, just make it easier. Because unfortunately, a lot of them that I speak to, they still use, a very, very manual based system, which requires just somebody, typically a chief of staff or a, executive assistant, to be managing that piece. So, the system can just multiply this. But what I've seen is the companies which have been, the founders which have been doing well, I've seen a correlation with, using this construct. I'm not saying this is the silver bullet, but I've seen this being one of the biggest multipliers on, very, very moving very fast in the direction that they set for themselves.
So what you're saying is, just using OKR is like hiring maybe half a staff or somebody who is going to manage, make sure everybody's goals are aligned. You can do it by hiring somebody like chief of staff, and that's fine. That's an interesting perspective. I didn't think about it that way. Yeah, very interesting. So I just want
somebody's job, as you said, somebody in the early stage, if you see anything for which you don't have system which can scale it, and it is important, somebody has to do it, right? Which means there is a time, there is a resource, there is a focus somebody's putting in. And I think that's what technology does, right? How do you reduce a very, very transactional or possibly a follow-up work, right, with something which can just make it very, very, amazing to manage, good experience, easy to look at, and use intelligence to make lives easier for everybody, right? I've been a, chief of staff equivalent for 2 times in my role. Now, this part of the role I've always hated, right? You have to nudge people, talk to them, call them saying that, hey, how is the progress? And then I have to get the data, put it in an Excel, create a, report out of it. And there should be a system which should, understand me and get me this information at get the data from the user level and make life easier. So absolutely, that's another reason why I'm a huge fan of, the entire construct.
Very interesting. By the way, you probably heard siren sounds in the background. It's just San Francisco. You cannot avoid them. I also want to point out that Manohar has a few questions, and we'll get to them. So have some patience. We'll first cover some of our earlier questions, and then we'll get to the audience questions. So, okay. So, companies are using OKRs, and it's definitely helping them. Besides the growth and the alignment, Are there any surprising ways that OKRs have manifested themselves in the company's performance? One of them was surprising to me, as Ketan mentioned, was you don't need an additional employee to keep track of things. Are there any surprising ways they have been used?
Yeah, so I can go on that, Rishi. So I think it's not about just the framework, but how is that applicable in an organization? So there are frameworks like OKRs, which are available to any company today that is seeking growth or want to align their people in their organization. But I think what sometimes gets lacked is the discipline to follow that and be on top of it, right? And a lot of organization, a lot of leaders do talk about high performing culture, right? And that culture is nothing but putting that discipline together for an organization or for its people together. And what happens is that this framework of OKR gets that discipline together just because the way you work with OKRs, you tend to come up as a cadence, bring up your teams together for a weekly check-in, for one to understand where they stand, for their progress. And it's completely transparent just because anybody can go on the product like job and figure out, whether the movement is there or not on specific KRs. What are the different actions which the team is taking in order for them to do the movement? Are the actions being done or not, or they are delayed or not? So everything is transparent for anybody to see at any given point of time, right? And then there is something which is a mid-quarter retrospect where people come together and really figure out that now it's been 6 weeks out of 12, and have they done enough movement on their specific objective, their specific KRs for them to reach where they want to reach by the end of the quarter. And similarly, at the end of the quarter, you get into a similar retrospective, right? And then when you figure out at the end of the quarter that why things have not been moving, you actually bring the skeletons out of the closet and figure out and open the cat, deal with it, stitch it back, and then go into your next quarter with better being better prepared. So there is no rocket science. It's just the same way of doing business, but much more collaboratively. Cross-functional teams can come together. You don't get into that one silo mind. And then, things move much faster just because of that discipline. And a product like Job just makes it easier for anybody to come and follow that whole process. As an organization, you get a lot of data that you can get insight from. And now, with the use of AI, I don't want to make this an AI-centric webinar, but with the use of AI, it just helps to enable users to create their OKRs better, to create those actions or initiatives which might not be in their domain, but there are some good practices that they can follow from. So I think that's how it's helping.
So what you're saying is, that it brings in some sort of a transparency culture. Once you find out the issues, you cannot just push them under the rug. You have to deal with them. So problems get solved earlier before they become serious, and that, of course, it will eventually create growth.
Let me just add here, I think you got me thinking. So let me give you two very different use cases of what a system like this has done to individuals. One, so what happens in startup is, you go for a moonshot, right? You say, okay, this is how I'm going to change a world. So when the first time a founder stands and say, this is what we are going to do, the idea is here, not even here, right? It looks like, can we just do it? But the founder believes, that this is something that we are going to do. Now, it's very important. So when the founder keeps on talking and focusing and measuring, right? Gradually the idea moves here for people, right? So, the feeling is like, okay, this seems to be doable. It is making sense right now, right? And when you keep on creating cadence and, when you keep on talking about that, it then gradually moves here to a heart level. That's where, people, there is an alignment to the vision that happens, right? So if you see any idea starts from, very abstract, then gradually it moves to the minds of people and then it goes to the heart. And that's where the magic happens, right? Then you don't need to tell people why that vision is important, because you have just, created the vision is shared now, right? So that's one part that I've seen what a construct of OKR does, because what you're doing is you're taking small significant steps and telling people that this is, realistically possible, right? That is something very, very powerful I've seen of OKR. Now I'll come to the second part, at least from the part of the world that I come in. Performance management is the OKR is the biggest, most challenging system to put up in any organization, right? It's one of the difficult ones. And if you look at the social structure, at least, fundamentally, goals or objectives or OKR is not something that I was at least told when I was growing up. Okay. That's creates a very, very, resistance in our mind. Why do I do it? That's why organizations have to do it. Now, I'm also, I'm a practicing coach, and I've hired multiple coaches. Now, every time the kind of results I got for myself was unbelievable. I never thought I could reach that. Now, when I look back, what exactly did they do with me, right? They helped me figure out the biggest priorities that I should focus on, decide what not to do, and break them into very, very small milestones. And with OKRs, as a system, I've seen a lot of people coming back to me and say, hey, I have started to use this similar construct in my own life and I'm getting results that I want, right? I can, morning I wake up, I say, okay, I need to write something, I need to go exercise, I need to spend time with kids. There are multiple priorities that could come in. But when I say, okay, this year, one of my objective is to achieve this, then it just makes it easier for me to break it into what matters today that I do and how do I measure to get that results. And I've in my coaching journey, fundamentally, I have been using the OKR construct. I go to people and say, what are the 3 things you want to achieve this year? Break it down, right? And with your coach, which is, an accountability partner, measure how the progress is. And you start to see to move towards that. So I just thought I'll share these two very, very, non-linked but important perspectives of how I've seen OKR benefit the overall system.
You're replacing multiple people there. You're replacing, your mentor with OKR. You're replacing your chief of staff with OKRs. In a different way. I'm not saying you can completely disintermediate them, but OKR also works in that particular way to help you prioritize things. And I understand that, I end up wasting a lot of doing things that are urgent but not important, and that doesn't move the needle in any way. Getting that priority nailed down along with your colleagues, along with your boss, definitely helps the needle move for you and for everybody in the right direction. So we talked about how the OKRs are helping the companies. And we all know that results into alignment and goal and growth and all that. As an investor, what does that mean? And I'm looking at some concrete impact on the venture capitalists. Talk a little bit more about, a company that's growing, let's say, 20% per quarter versus a company that's going 30% per quarter. What does it mean in terms of the exit possibilities, the customer possibilities, the probability of you multiplying your, investment, all that kind of stuff that VCs really care about. So talk a little bit more about those elements. So who wants to go first?
I can go first. Yeah. So as you mentioned, like in terms of like growth and exits, right? So if you're looking for an exit, if you're looking for an exit through an acquisition, again, same thing as I mentioned, I think the company needs to really fire on all cylinders. It needs to be well balanced. And also, when you're getting acquired by a larger company, you can be scrappy in your startup, but during diligence process, if you sort of show them that, hey, look, we were really running like a tight ship, you had OKRs, you're like sort of executing on sort of quarterly goals, that actually improves the perception of the company and the quality, because they know that once we take you in, and if you put more headcount on it, you're going to scale because you already had processes internal. So a lot of times some of the smaller acquisitions, they fail because you're running as a scrappy startup and you go to a large company, you cannot align and you don't fit in with the large company. So if you already start with having some sort of a process, on the other side, I think the acquirer feels much more comfortable. They might also assign a larger value, knowing that the acquisitions will be successful and they will be able to scale. Yeah.
So they see it as a reduced risk of execution as you scale up.
Yes.
Okay, that's very interesting. Yeah, of course, it has a lot of value. At the end of the day, the valuations depend on what are the risks left that needs to be addressed, and of course, on the growth side as well. So, Pramod, do you have any numbers, like anecdotal numbers, that you can talk about a startup, that's not doing certain things, need to worry that it's not enough growth, and are there any numbers like that? The startup must grow a certain growth rate every quarter, otherwise it will not have that escape velocity.
There's no number. I think you need to grow according to the customers, right? Initially, you need to spend where there's an ROI, right? So if the product is selling, if it's selling with one salesperson, you can hire second and third salesperson. But another sort of use of OKR is also, as I mentioned, sort of looking at all of the KPIs. So for example, if you use an OKR for like customer service, or if you use something for like product marketing, you will make sure that things are not like undersized or oversized, right? So just an example, like, hey, you have like 10 customers and then you hire 2 customer service people. Now 2 customer service people are taking care of 10 customers, right? So that looks like an overkill, but guess what? If they had more tickets and more issues, that's still fine. On the other hand, if you have like 200 customers and then your customer service is still like 5 people and you're still having customer service issues, it's going to get caught into that KPI and OKR sort of a model proactively, rather than sort of realizing after the customer's churn. So these are kind of KPIs and ROI for when you use OKR models.
I see. So from VC perspective, you want to know about the problems up in front.
You want to make sure that everything is sized properly. It shouldn't be undersized, oversized. Then you also want to make sure that everyone is sort of focusing on the right priority. Like, initially, if it's like about making 5-10 customers successful, you have that sort of a view that, hey, what do I need to do to get them successful? If you need to deliver a product, like, what do I need to deliver? And that's where an OKR framework is very useful.
So from VC's perspective, if somebody's using OKR framework in a correct manner, it also takes away a risk that the company's different departments are not well balanced. It kind of, there is some built-in mechanism there to make sure that the company is growing in the most optimal way.
Yeah.
And
I just want to double down on what Pramod just said. And I think every startup goes through its own cycle, right? At an early stage where you want to get a product market fit, then where you want to do the growth, and then how are you thinking about whether going really scaling up, going acquisition or not? And I think at every stage, the OKRs can be very different, right? I mean, it's not just one thing that you're chasing. So it just enables you to get to that goal faster. So, like, if you want to get your early customers, then what are the things that really matter? If you want to make success stories, then what are the things that matter? What is it that you should be measuring within your team, within the activities that you're taking? So I think it just your mind kind of starts working in a very disciplined way for you to chase the right things, see whether you're making progress or not. If you're not making progress, be very objective around it, not be biased, and start blaming people, but really figuring out that what is it strategically that you're doing right or wrong, and then move forward. So I think that shift it's a very small nuisance, but that shift happens in the founder, in the management, in the leadership way of thinking. And to me, that has where the magic has happened in a lot of companies that we've kind of put OKRs at, and we even see it at jobs. So thanks, Pramod, for pointing that out.
No, if I can pick up, and thank you, Pramod, for that. Thank you, Gaurav. One of the fundamentals or practices or things that I've understood, right, which is kind of underlined, is that as much as the product matter, I think a lot of bet happens on the mindset and how a founder grows in early stage organizations. Now, choosing what is important, right, or focusing on what matters, it also demonstrates that you as a founder have built the ability to pick the right battles, so that you still take the organization to the level and hit the milestones, right? End of the day, that's a very, very important part, right? So OKR enables a founder to pick what is important, right? As you said, Rishi, about urgent and important, the framework that Seven Habits speaks about. Again, very important, right? And I think that's again what, as an investor, or a venture capital fund, you would be looking at, that how are founders able to pick up the right battle? When I say founders, I'm including co-founders in the core team, and execute to that, right? So you have a thesis, you've been funded basis that, and you have to show that that value creation is impacting the world, right? It'll only happen when you pick up the right battles and move in that direction. The one thing that I hear from my
Absolutely. At
senior
least in the early stage companies, the VC betting on the team, on the founder, and the rest of the team. And the more the team can work very well together, intrinsically, it reduces their in VC's mind, it reduces that risk of that the team will not work, and so you're reducing the risk for them.
In fact,
And
yesterday we were interacting with some very, very, a very significant person from the industry, and he said something very interesting. He said, time management in organization or at an individual level is the incorrect way to look at it. It is about how we manage energies and priorities, right? Because we still have the same time. So where are you putting your energies on? Where are you putting your attention on, right? And if you again go back, this is exactly what OKR does, right? Pick your battles, pick those 5 things that matters the most, and then how do you ensure that it's executed and the last person in the team understands and contributes to that, right? And I love this, because historically I've been taught that time management is what you need to learn. But yesterday was a perspective saying that time is constant, right? What you have to learn to manage is your attention and energy. And again, I see a connect between the construct of OKR here.
right.
I love it, and just want to tell you this whole understanding of how and why energies and priorities are so important than just thinking about managing your time. I think it's a very powerful thing. Thank you for sharing.
Thank you.
So, before we go to the audience questions, do you have any thoughts that you would like to share that we have not covered in any questions so far?
I mean, I can share one example where it was a surprise for me, and and very pleasant surprise actually. So I won't take the organization name, but an organization which has been running for about, let's say, 75 odd years, and very primitive way of working. They're in the cement business, manufacturing, out of a town in the south of India. And when they came to us, they said that their problem was that there has been a shift from how business was happening into the whole transformed, digitized way of business today. But that shift is not being taken by everyone, right? And it's hard to do that when your whole organization becomes accustomed to one way of working. And the leader had read the book Measure What Matters and loved the whole idea of OKRs, and they wanted to try and see what could be done. We've been now with them for about 4 quarters. We started actually with a whole consulting exercise. So we bring in the consultants. We've got like extended consultants that we bring in, and understood the leadership, got the vision, got that cascaded down to their teams, their leadership, and then in the individuals. There are about 4,000 people, and now I just had a conversation with their CHRO about a few days back, and they say that the whole energy of the organization has changed. So they're still in the same business, they're still going for the same goals, but just the transparency that the goals that the system has brought in, and the kind of things that people are chasing now is just kind of brings that energy and the priority which people are chasing and going for. So I just want to take that point and say that sometimes it's not just the new age startups and the the technology startups, but even bigger businesses. When a shift like this happens, it could be magical.
Wonderful. Ketan and Pramod. Oh, Pramod.
Left. No, I think the only thing, Rishi, that I want to add is, as venture capitals and investors, we are vested in the growth of the company, right? So, the only one thing I would call out is anything that benefits us should not be a priority, but anything that benefits the organization should be a priority. And naturally, it is something that will become important. So to every early stage organization, what we say is, do what matters, focus on what is right. And if it is benefiting the organization and the founder, it is of course going to benefit the venture capital. Of course, we're there to help nurture, create value, give that guidance. But and OKR definitely, as a construct, I'm not going on the technology part right now, is fundamentally what we have seen, what helps as been the differentiator at a lot of places for a lot of companies that we have worked with. So my point is, don't do it for the investors. Do it because it is important to you, and it of course is going to come and become, be beneficial to the investors.
Absolutely. I mean, at the end of the day, it's the company's show to run, right? So with that, I would like to take the audience questions. We have a few from Manohar. So who sets OKR and who tracks it with the company? I think these are all for Gaurav.
So who sets OKR and who tracks it? I think there are different ways to do it. A lot of organizations which are starts top down, but we've seen bottom up approach as well. When I say top down, it's the leadership who kind of gets the vision of the organization clear to the company, and then from that, your yearly objective cascaded into your quarterly objectives and key results, and then various teams kind of align themselves with their goals, with the organization goals as well. So I think that's the setup usually we have seen working. Usually there is an OKR champion within an organization which is taken up, and sometimes an executive at a smaller, medium level organization can do it, or the chief of staff. We've seen the HRs playing a role for that as well. So that is how OKRs are set up. What was the second part of your question, Hrishikesh, if I may ask? Or did I answer
In the
it all?
meantime, Gaurav, what I can add for Manohar is, Manohar, one of the, OKR works on a lot of the construct of ownership, right? And that's a very important question. There is somebody who has to, own, as Gaurav said, an OKR champion before you start the exercise and not after you have started it, because somebody has to own the entire process of, tracking, especially the operationalizing and making it happen. So one champion or multiple champions, but owners are important, and you should do that before you start, rather than, after you have gone to the journey and say, hey, now we need to find an owner. That's not the best of the ways, you'll create an effective OKR system.
The question was who tracks it. I mean, if you use the software, it's the software who tracks it in many ways, right? But of course, the boss will have to read it at each level, right?
Yeah, and not just the bots will have to read it, but depending on what system you use, there are many around today. There are a lot of systems which has the intelligence which give you the nudges at the right time in order for you as your teams to figure out whether you're moving or not, whether the pace that you're moving is enough for you to get to your goals or not. Are the actions happening or not, as I said before? So all of those things, a lot of tools can handle today for you.
So the nudges, let's say you're only 80% and you're very close to the deadline or whatever it is, the software can do automatic nudges, but then if there is something seriously wrong, somebody in person will have to sit together and reassess what needs to be done. That leads to my second question. Are OKRs fluid or they are cast in stone?
No, they're absolutely fluid. I mean, the OKRs are servant to the master of the business what business wants to achieve, right? And today in today's environment, businesses can be very agile because the requirement of the business can change very quickly. So it is not that if you set an OKR, that is what you're going to do for the next year. If in the middle of the year things change, priorities change, you can go back, look at them, and then change as per what your business requires.
Yeah, in fact,
so it's
experience, Gaurav, that's one of the strengths that OKR possesses, right? That it makes the entire process very agile, where you're not hard bound to a balanced scorecard. So to add to that, Manohar, it actually is a huge uptick that OKR does is it makes it fundamentally very, very agile.
So what you're saying is it makes the big ship steer quickly because it quickly aligns the entire ship in a way. I'm trying to create an imagery there. Yeah. Okay. The next question, does the OKR get set by the executive team and it's trickle down adoption by the rest of the organization? If OKR is set by individual group, then how does it align to the company's overall objectives? I think we kind of answered this question already, but do you want to clarify anything else?
No, I think our conversation kind of filled it in, but Ketan, if you want to add anything to that.
My experience is limited to certain companies, but in my view, Manohar, it can be both ways, right? I think, again, the idea is to do what is right for the organization, your structure, your scale, your size, the kind of units that you have. So there's no hard and fast rule that I believe it is important, and it could be bottoms up, top down. But, as long as you're able to choose what is important and, break them into very, very specific action level that can be measured, I think it would work. There's no, at least in my experience, there's no hard set rule that it has to be top down only. But most of the success stories of large organizations, in a very large organization, becomes difficult if it's completely bottoms up. So a top down has definitely more use cases in a large organization that I have witnessed.
Okay. So the next is very interesting question. We talked about each department having different OKRs and things like that. But the question is, can the panel provide example of the top 3 OKRs that are a must for startups, mid-size or large companies? So essentially, which three top OKRs keep bubbling up everywhere?
I think it really depends on what business you're in and what stage of business you're in. Like startups, as I said, could be in different stages, right? So the top 3 OKRs can differ depending on what stage you are in. But for startups, usually it's about how fast are you growing, and is it enough for you to get the market share that you need in order for you to be in business and really scale? So it could be a revenue OKR. It is about getting the teams together. So what kind of team are you putting on? And is it really going to help you in the business? So more people centric. And then third, how are you funded, right? Are you going to run out of your finances, or you have enough for you to be there? So I think that's for the startups. For mid and large, it could be more, how do you sustain the growth that you have? How do you penetrate the markets which are not been there for you right now? So how do you kind of look beyond what you have right now in terms of growth? And then what is the leadership? How do you ensure that your leadership is being trained for them to take over their teams? And it becomes more about people and leadership there. So I think, in my view, those are the few things that come across quite commonly when we are working with businesses which are startups or mid and large size.
Ketan, do you have any thoughts?
I resonate to what Gaurav said, and while he still has a larger perspective because he's helping a lot of organizations in different scale. But my experience more to being on the other side, one, they can't be standard objectives, then it's a balanced scorecard that we're talking about, right? Fundamentally, the construct of OKR is that choose what matters to you. What's your objective, right? Are you have you got into a space which is about innovation and you are the first, you already have a first mover advantage? Or are you trying to get into a space where, there is already crowd, but you have to create a dent, right? So the objectives have to, be calibrated to what is important for you. If it could be copied and standardized, then for me, it is balanced scorecard, right? And there's nothing right or wrong here. You'll have to figure out where you are. What kind of industry are you playing in, right? And what is your goal as an organization, right? If you're a mid-sized company and want to go for an IPO, right, then you would have a different objective. If you're a mid-sized company, but you want to, go into expansion, right, geographical expansion, then your objective changes. If you're a company which has been growing very fast, but now profitability becomes important, then your OKR would shift. So again, it's a choice to be made, that what matters and what is important for you in the playground that you're playing, and where do you want to create an impact? So otherwise, if you could replicate it, again, I'm saying it would be a balanced scorecard for that matter.
Understand. So, the external conditions are different for everyone. The internal situation is different for everyone. So there cannot be a set of OKRs that are applicable to all, or that they are more popular. Even two companies in the same industry competing with the same or very similar product, the leader in that industry will have different OKRs than the follower and the laggard, right? So that makes sense. Okay. Next, selling an OKR platform to companies. Is it a painkiller or a vitamin? I'm trying to understand. Early stage startups are in highly fluid state, getting product market fit, revenue traction, etc. They are in a hustle mode. How would OKR be a must in the mix? So, I mean, this is, a very valid point. If you are a very tiny company, you are moving so fast, your priorities change so fast. Do you even have time to maintain your OKR sheets?
Yeah, I think we need a separate webinar for this, but maybe I'll try to answer it in a minute. So I think it's a painkiller or it's a vitamin. It's something that you got to decide for yourself and for your business. I mean, I would say that the better is that you take care of things proactively before they become bad or worse, that, you know, it becomes a painkiller for you. So in that way, it's vitamin, but there are businesses which are in that panic mode today. So for them, it becomes a painkiller today, right? So it kind of, again, depends on which situation you are in, what industry you are in, what stage of business you're in. Yes, you are at early stage, you are hustling a bit and you are trying to get your product market fit. All OKRs are doing is giving some structure to that hustle. It's not asking you to hustle less or more, but you know, it's just giving you and your team a direction to hustle in. So that's what OKRs do, in my view.
Well, thank you, Gaurav. Ketan, do you have any perspective on that?
I fundamentally see OKR as a vitamin, right, for long term. But as Gaurav said, you know, you can use vitamin to solve certain of the immediate pains, to create and help people understand what it can do, right? It's like, but fundamentally, you know, it solves for long term. You know, you set a culture of OKR, then you essentially don't have to worry about a lot of, you know, you will have lesser pains as you go ahead. So for me, it is a vitamin, but there are times you can, you know, use vitamins to help reduce certain pains immediately, and people understand, oh, this is exactly what a system can do, and you bring, you know, build an adoption to it.
I want to share a perspective that I just thought about, and I think it's the Western medicine versus the Eastern medicine kind of thing. The OKRs puts a framework together to solve problems at a very fundamental level. You're not putting a band-aid, you know, or trying to stop the blood. You're eliminating the root causes that could create a big problem. So in that sense, yes, it is a vitamin, but if you don't have it, you could really create a lot of pain for yourself.
You're absolutely right. Yep.
So I think we have answered all the audience questions. We have more attendees. Anybody else has any questions? Well, if not, there is a form in the chat where you can take, you know, you can access special offer reserved exclusively for the attendees of this session. So please take advantage of that. If your friends need it, please let them know. But they must watch this webinar, which will be available on LinkedIn first. Okay. We would like everybody to not have those complicated problems and take the necessary action to make your organization strong at a very fundamental level. So if you're not already using it, please consider using it. If you're using it with Excel sheets or some patch-up solution like that, that's a great start. But if you are ready to invest a little bit, you can really create a much bigger impact if you use a software. And at Job, we believe ours is the best software. So please give us a holler, and we're happy to work with you. Gaurav, any closing thoughts?
No, thank you so much. Thanks for your time, the audience, and thanks for putting it together, Rishi. Thanks, Ketan, Pramod, Aditya, for, you know, help supporting this. Thank you so much.
Thank you, everyone, for attending today.
Thank you so much. Have a fantastic day. Bye.